Hey, it's Joshua here with another edition of Mortgage Clarity. And today I want to go over the housing numbers for the month of September. Now I'm filming this late October, but we just recently got the final numbers for September. We kind of get the numbers throughout the month, the preliminary numbers, but then they make revisions and adjustments to those numbers. So now that we're at the end of October and we have our best readings for what happened in September, I want to go over that really quickly and just see how is housing doing nationally. Again, this is being filmed October 2022. So let's just jump into these September numbers and see what they are telling us. All right, so existing home sales for September 2022. Sales month over month, September this month compared to August last month, down 1.5%, which brings us to an annualized pace of about 4.7 million homes per year sales. And that's actually slightly better. The market thought we would be actually down even more than that. On a year over year basis, we are down 23.8%. But a couple things I just want to point out there is one, again, with rates having jumped over 3.5% since the year started, not surprising to see the market change a bit. However, I do want to point out anytime you're looking at numbers like year over year or month over month, you do need to take time to look at what was last year's numbers and was that normal? Because if you have a higher than normal spike, like we did in 2021, we saw a spike in activity because in 2020 we saw a spike lower due to COVID. That pent up demand came back, gave us higher numbers in 21. And so when you do your year over year comparisons, you do need to take that into account. Now I want to talk about median home price here. That was down 1.2%. But it's really important to make sure you understand the difference between median and mean. Median is just like when you're driving down the highway, you have the line down the median, it's down the middle of the road. That's what median means. It doesn't mean average. So I didn't say on average home prices dropped 1.2%. What it's talking about is that the half the homes sold on the other side of 385 and half this side. So you can have a reduction or an increase in the median price without having a change at all in the average price. What this tells us is that homes in the higher end, fewer of those were selling. And so since fewer are selling, we have to adjust where that median goes so that we have a balanced scale, half on one side, half on the other side. So with that said, again, that does not mean we saw home values drop 1.2%. Just simply fewer homes in the higher end of the spectrum selling moves that median price. And then also on a year over year basis, it's still up. So in spite of the market we have, we are actually still up as far as activity. Now let's take a look at inventory. Inventory is an important thing. I think you'll see here at 1.25 million units compared to last month at 1.28. This kind of goes into, if you watch my videos in the past about the housing market and stuff like that, those naysayers who were citing the fact that inventory continued to grow as a reason why the housing market was negative, they failed to show and to explain that that buildup in inventory is a naturally occurring cycle that happens every single year. There's seasons where things build up and then there's seasons where things sell off. And here you'll see that it looks like we're actually cresting and we're starting to see inventory drop. Now, it's only 1 month, so we got to see what comes with the next few months. But again, it's normal that we saw that here, and I'm not surprised to see the numbers dip either. So 3.2 month supply. Normal housing market's about 4.6. So still, even with where we're at, we are seeing that the homes, the inventory levels are lower than normal. But I really want to draw your attention to this last bullet point down here, the active listings. Active listings is really what matters. And this tells us another story here compared to the just looking at month supply. Because if you look at this, what this shows us is that over 41% of the active inventory, that 3.2 month supply, 41% of that's already under contract. It just hasn't closed yet. So it's not available. And in a normal market, you would only expect to see 25% of your inventory under contract at any given time. So this still tells us that there's a lot of activity out there and a lot of pressure for those homes that are priced correctly. They are still selling quickly. And if you take out those homes in which you're not actually able to go look at and make an offer on, you only have about 1.9 months inventory supply. Okay, so let's take a look here, last few numbers, and then so days on market. People, it's funny. I get this. The market had gotten so used to selling homes in like less than 7 days that the idea of a house taking 2 weeks or 14 days, buyers or sellers sometimes start to think, oh, the housing market, maybe I should adjust my price. On a national level, we're still selling homes in 19 days. That's extremely fast. That's not normal. In a normal market, you expect it to take a couple months to sell something that's going to cost, four or 500, 600, $800,000. 70% of homes still sold in less than 30 days. So this still shows us we have a strong housing market here. The other thing too I look at is the makeup of who's buying. And what this shows us is 29%. So there's actually an increase this year versus last year of the mix of first-time home buyers. And that's the demographic that really drives construction components. So we still see that home buyers, first-time home buyers, haven't left the market at a greater degree than anybody else. We definitely have fewer buyers that are on the sideline because rates are higher, and out of that fear, they just kind of step back, wanting to see what happens. But it's my belief that as soon as the market just normalizes, meaning that rates stop going up at a fast pace, particularly if they start to come down a bit, which I think we'll start to see here next year, those buyers will come back into the market. So the mix up of the current buyers still remains strong of first-time home buyers, cash buyers at 22%, and investors. 1 out of 6 homes are being sold to an investor, which means an investor, their purpose of buying is to make money, right? They're doing it right. So investors still see value at current rates and current home prices, given what current rents are doing, that they haven't really left the market. 1 out of 6. It's less than it was again a year ago. The numbers were better, but this is still a strong number representing that there's still value for investors in this market. And then here, just going to give you a little quote here from Lawrence Yun. He's the chief economist for National Association of Realtors, or NAR. And he says here, despite weaker sales, multiple offers are still occurring with more than a quarter of homes selling above list price due to limited inventory. So still going for more than asking price. He also added that the current lack of supply underscores a vast contrast with previous major market downturns for 2008, 2010. So what he's basically saying here is, you guys, while we're seeing a shift in the market here because of the rates, this is nothing like 2010 or 2008. And so those who are negative in the housing market and expecting a housing bubble where you just see a massive drop in value, I think you're wrong. I feel confident you're wrong because, again, when you look at the mechanics of supply and demand, even though we have weaker demand due to higher rates right now, we have weaker supply because now we have sellers who aren't willing to sell because they don't want to leave their 3% rate and step into a 7% rate. We have builders who, because of the change in the market, they don't want to hold as much inventory, so they're going to build at a slower rate. All of this is serving to continue to reduce an already anemic housing supply. So I do think housing stays strong. Now, the real tell here is going to be again October. So these are September numbers, of course. In September, for those of you who don't know, follow the interest rate market, it was a bad month for interest rates. We saw a huge increase in interest rates over a short amount of time. Was not comfortable. So that's definitely going to have an impact. So I think in November, when we start to really review October's numbers, I think that's what we'll start to see. I think, in my opinion, maybe kind of a bottoming here on this. I do think that the things are setting up that we will probably see inflation come in check. So I think the reports we start getting in November, December, January will show inflation coming down. Inflation is what caused rates to go up. If you watch my video on that, you'll know more about that. So I think rates will start to go down throughout late this year, first half of next year. And when that happens, I think those buyers we talked about being on the sideline will come back into the market when they see rates drop another 1%, 1.5%, maybe 2%. They're going to come back in the market, and I think that's going to heat things up again. So I do think that if the housing numbers work for you today and it's affordable, it might still be an opportunity. If I'm right and rates go lower in the future, great. Refinance. You get the price today at the future rate. If I'm wrong and rates just stay where they're at, well, you still get today's pricing, and the rates are what they are. So that's kind of where I stand for it. If you got questions, let me know. Feel free to hit the like button if you like this, or ring the bell. Subscribe as well, and forward this on to anybody else who you think might like to know a little bit about the market and what the numbers look like. All right, till next time.